Good morning, ladies and gentlemen. Happy Friday to you all. It's that time of the week again for Viewer Requested Ticker Fridays, where we go over the tickers you requested during the week, giving you the bull and the bear case. And with that, let's get into the video. We're going to start off with Coinbase. Pretty simple. You're above all the moving averages. You're above the 200 daily, above the 50 weekly, above the 50 daily as well. And you are starting to get bullish crosses on those moving averages. Short-term price is going to start moving over long-term price right here when the 50 and the 200 daily cross one another. You had a golden cross here that then you came down, retested those moving averages, kind of consolidate around them just because you were in the kangaroo during this period of time here, and now you could be heading higher. However, it's a very simple pattern to understand for Coinbase. You are in a symmetric / ascending wedge just because the upper region here is basically very flat, but you could also draw the wedge in a shape of coming back to this local eye here and basically coming back to the previous peaks, the false breakout. So really it comes down to whichever one you want to kind of judge off. I'm going to go off of the double topping that occurred around the $85 mark. So once you get above the $85 mark, that's when you go extremely bullish on Coinbase. It's trying to fill this gap here between the $77 mark and roughly the $72 mark from where the last point of the gap fill was, making some progress. I do think as long as you hold 50 daily moving average, then definitely you can have the ability to continue higher. Buying the dips is kind of what the market is trying to signify here, and you could start seeing a increase in green volume here. So you're seeing more green volume coming in, larger candles on the daily. So definitely bullish sentiment for that. Now let's dive over to Luxalgo, see what it's telling us. So if we look on the MACD, we can clearly see we have a divergence between the two lines. That's good, bullish, cross bullish, heading up higher. RSI is about to cross over as well. So we definitely have everything leaning towards the bullish side and the start of that kick up higher. If we get above the $71.12 mark, I definitely do believe that we have a continuation possibly to higher prices, trying to maybe tackle this resistance zone around the $80 to $85 mark. And then my resistance, the ultimate resistance, which I do think Coinbase will kind of reject off of there, is going to be that upper trend line, but I need to see what structure we create when we get back up there. If you create strong structure to then have a retest and push back up above it, that would be good. If you just slam right up to 85, I definitely see you going to get rejected, come back, break your downwards trend line, and be more bearish on the company. So with that, we're going to go over into GRMN next. As everyone knows, with GRMN, Garmin Ltd, you are below the 200 weekly moving average. However, here's the caveat. You do have what could appear as an inverse head and shoulders on the daily chart. So you definitely could, not meaning you will, see possible price explosion to the upside and continuation. You probably see break above the 200 weekly. So it'd be an interesting buying point to buy the 50 daily moving average and kind of buy the dip on the company as it continues going higher. Now, if you break below the 50 daily moving average, that's when I will cut my losses, just because price action isn't necessarily acting the way I would suspect it to. And also you have a clear and present uptrend on Garmin. So basically, as long as this uptrend holds, then the company should head higher. You could go sideways for a short amount of period of time. Earnings is coming up May 3rd, so also coinciding with the Fed meeting, so definitely going to be a jam-packed day for this company. Then if you break above the 200 weekly, then you could see further price expansion, especially how the market's moving up higher and gaining more bullish momentum. It really had a strong day today, so it really could push much higher, come up, tackle this 200 weekly moving average, and you could be possibly setting up an A to B, B to C pattern that completes right at that 200 week moving average. So we really have to see. You could price in on this trend line to dollar cost average into the company, but I would really get bullish once you got above that 200 weekly, because it's just a very easy expansion at that point, and then the market would have sorted itself out by then as well. So everything be going for you in your favor. You are going to get a bullish cross of those moving averages in a short amount of time. So more and more bullish case being informed here rather than bearish case. Let's jump over to Luxalgo to see what it's telling us. So similarly to how I was saying, you are starting to curl on the MACD, so you could be showing more bullish signs. RSI is above the 50 and pointing upward, so you definitely have a lot of room to run. Your first resistance points, in my opinion, will be this $100 price point or $100.89 to be exact. Once you break back above that, I'm going to be targeting this localized high here at 102.93, and then the reversal zone with the price action at 105. Now, if we break down, probably trend line support of 97.57, and then this price action zone at 95.37. So definitely areas of support, but I do believe we're going higher. Next, we're going to go to LEVI. So looking at Levi Stratus and Company, LEVI, we can clearly see you're below the 200 weekly moving average. However, I don't put much stock into that just because it just started. This company is relatively new, so it's just been trading for the most recent 200 weeks. So we have to look at the other moving averages that gave it more support. And sadly, we see that it's below all of them, a gap down below all support. So it's just very bearish in my opinion. You rejected off the 200 daily and the 50 weekly around the $16.67 price point and $16.71 price point. So definitely an area that was key support for you now became resistance, rejected off it, consolidated lower. Basically, if you start breaking these lows of $15, then I'd be looking for more downside potential, especially because this was a earnings push down that is not easy to overcome. Now let's just quickly jump over to Lux Algo just to see if it tells us anything better. On the daily, your MACD is diverged horribly. This is a very bearish company. RSI has not bottomed out and oversold yet, so I would basically stay away. You do have a price action zone around the $14.60 area, but you are coinciding with a price reversal zone, so it could get a dead cat bounce there. But the ultimate buy point for me will be around the price action target area of $12.49, or even anything in this price reversal zone, probably coming down to the 13s. I really just don't like how we gap down below all those moving averages on the earnings and then are heading significantly lower with the MACD. However, you could get a dead cat bounce here, you could price structure, you could bounce off the price action zone. It's all possible, but to me, for a long-term investment, until you start making progress above these moving averages, it's just not a play that I would really want to do or incentivize. You're better off investing in the S&P 500 and NASDAQ, especially with the bull run that they seem to be appearing to have. Next, we're going to go into CPF. So taking a look at CPF, it's just similar to the last company we just covered. Gap down below all the moving averages, broke down below it, not making any price action progress to the upside. Haven't really seen that volume capitulation bottoming yet. So until we see that, I would not be touching this company with a 20-foot pole. And we can jump over to Lux Algo just to see what it's telling us for laughs. Hitting that reversal zone, breaking down below, you are creating a divergence on the MACD. However, until this breaks to some momentum to the upside, I would not trust it. I've seen MACD divergences go for an extended period of time before they result in any upwards price appreciation. It is just a singular point. It doesn't necessarily have to play out like everyone thinks. And for me, basically the company needs to get back above those moving averages to create some support levels. You're coming up on earnings again, and if they basically report a crappy earnings again, you're not going to be in a position to recover this move. You're just going to create a lower move or a possible bigger selling gap down. Now, maybe it's the selling is overblown and you're going to head into earnings and go up higher. To me, like I said, it's get above all the moving averages to create better price action, and then it makes an easier investment. I don't want to work hard for my money. I don't know about you. Next, we're going to go into IIIN. It's now covering in steel industries. We are fighting for that 200 daily moving average. However, we have not gotten back above it yet. And you do have some price actions to get over, which is our 50 weekly and 50 daily moving average. You do have the support of the 200 weekly below you. You are maybe forming a W or flagging out here. I really can't tell for sure. But once we get a clear, decisive break, I'm going to say above the $27.97 and a full body close above it, then we definitely could see further price appreciation to the upward side. However, because you're going to be within the moving averages at that point, I'll wait for the kangaroo to close and us closing above the 50 weekly before I invest in the company. So it's definitely going to be a wait and see game for me on this one. And if we take a look what Lux Algo is telling us, we can clearly see we have a price action zone below us, which would be that 200 weekly moving average coinciding with that. RSI pointing upwards, but the MACD isn't going a whole lot of anywhere. So it really determines that there's not a lot of huge momentum swings in the company. I would like to wait and see how this plays out. It's just going to be easier to wait and see rather than trying to buy every single bottom and or top tick. So you do have a strong buy signal or a buy signal here on the daily. So it could show an incentive to go higher. However, the signal doesn't necessarily have to play out. Next, we're going to go to BKE. So looking at BKE, we can clearly see that it's broken down below all the moving averages. You did have a consolidation period on the 50 weekly, but broke down below it, actually gapped down, broke down below it, rejected off of the 50 weekly moving average after you broke down right here, and then are basically possibly heading lower. You have now 2 candle closes below the 50 weekly moving average, and I basically want to see today if it closes below that moving average again. That will give you a weekly close below the 50 weekly moving average, which is significant, and therefore we definitely have to see how price action plays out from here. So that's going to be my key telltale sign here. Now, if you're able to get above the 50 weekly and the 200 daily, then we could see greater price appreciation and creation of structure. However, based on the parabolic move the company had up and then basically the move that was rejecting back down, you could be setting up a to B pattern to the upside, which is very possible to complete at the $52 mark, which would be new all-time highs, I'm guessing. Let's take a look at the graph. Yep, pretty much. So definitely on the lookout for that. Or you could be setting up an A to B pattern on the way down through these stair steps that you're forming down, slam down, push back up, slam back down. So we definitely have to be cautious on that. That would basically be from A to B, B goes B to C, completing around the $20.75 mark. So it really comes down to, are you able to get above or stay below the 50 weekly moving average and the 200 daily moving average as well. Let's jump over to Lux Algo to kind of give us maybe a hint in which direction it could be going. You are sitting on support now. MACD is trying to pinch together, so it's leaning more towards the bearish side along with RSI. RSI is trying to get below 50, so definitely pointing more to the bearish side scenario playing out. On top of, to get back above the 50 weekly, you have a price action zone here that you would have to break along with the trend, and the trend is showing a strong trend to the downside. So definitely have to be cautious with this one going anywhere long. Just wait for those moving averages to play out. And next we're going to go over BAX. So looking at BAX, it is just a clear and present downtrend. You have no bullishness whatsoever. You may be starting to break that downtrend, but we have to see how it comes off. You got above the 50 daily, so definitely a starting point to get back up higher, but you have just so much price action that you have to chew through. This wouldn't be a long-term investment or even a short-term play, in my opinion. There's just better value out there. You're coming up on earnings, so it's just a horrible play. I wouldn't touch this with a 100-foot pole just because of the downtrend it has. If something had that much of a downtrend over the course of such a long year, it's just, my money is spent better elsewhere than trying to bottom fish this. Next, we're going to look at WK. So WK is probably a very good example of a company recovering above the 200 weekly moving average after it broke down below. You see further expansion of all the moving averages, and now you're starting to get golden crosses of those moving averages. MAC 50 daily is supporting you on the way up. So basically you could do buy the retests of the 50 daily moving average or the 21 moving average, depends on what you want to do. Now you do have a gap here forming around the $88 mark all the way down to $86 mark. However, you would have to break the 50 daily moving average before that were to happen, and you could be setting up what could be a to B equals B to C pattern, projecting up to the $116 mark. So definitely if you break the swing point of 104.59, that swing point would be confirmed and we start trading up higher, especially with the whole market moving up as a whole. I definitely could see that happen very soon and start tackling these price action here. However, you do what could be on a very large time frame be setting up a head and shoulders pattern. However, if you trade basically above, I'm going to say the $125 mark, you're going to invalidate that pattern. And due to it being stretched out for such a long period of time, I don't necessarily think it would play out. And also just looking at it now, you had this interim head and shoulders pattern that played out to the downside. So really does not give me confidence that this pattern would play out. I'm going to say it's a busted pattern. And I do believe you have more potential to go to the upside, especially with that A to B pattern sitting on the daily, all the moving average correct, and we're going to jump over to Lux Algo, see what it's telling us. So your MACD is diverged bearish, so it gives me a little pause that we may have a 50 daily moving average retest. However, it's starting to possibly curl towards one another. RSI is hovering around that $43 mark, so we definitely have to be paying attention to that. If it gets above the 50 mark, then we could see more price appreciation to the upside. However, volume is looking more towards the downside, along with the trend showing more strength to the downside than the upside. So it just has to be a very cautious play that you do, but I do see the bullish potential there. Now, the levels I'd be looking at to pick the company up would be the 50 daily moving average for 93.19, that which would put us around this area here of previous consolidation. If that breaks below, first target $85.36, second target would be the $80 mark. So definitely an area I'd be looking to pick the company up. I don't believe it gets down there because the MACD would be so plunged below along with RSI that it just seems a little less probable, especially with the move that it's been having most recently. And you can see a clear and present uptrend on the company. So the first thing I would say is you have to break this uptrend to get more downside. You could break the 50 daily to get more downside testing, but ultimately until this trend line is broken, I would not be looking for downside. I'd be looking for buy the dip opportunities. Next, we're going to go to TGNA. So the company is resting on its 200 weekly moving average after a massive gap down. So for me, it broke down below it, got back above it. So it's really fighting to hold it. It actually closed at it today. So we definitely have to see where it goes from here. And we're going to jump over to Lux Algo just to see what it's telling us, because it's very hard to determine just based off that graph. So you have a bearish cross on the MACD here on the daily, and our RSI is crossing over that 50 mark. So you could see more downside potential going and dipping below the 200 weekly moving average and then going lower. However, we have a strong buy here with no exit signal yet, so we could push back above it and maybe try to fill this gap. For me, I would do the easy play of buying it at $17.76 to then play this gap fill all the way up to the $21.54 level. That's where I'd be looking at, because one, you'd be above the 200 weekly moving average, creating more price structure, and you would start tackling the 50 daily moving average as well. And at some point then all these moving averages would coincide together and maybe you create more price structure, but then you would have support to build on and a get out point as well, because once they break those lines, you basically get out. It's a very simple trade there, as I would say. So with that, guys, we're going to conclude today's video. I thank you so much for participating, throwing your tickers down below. And if you have any tickers you would like us to cover, throw them in the comments section below. Hit the like button. It really helps the YouTube algorithm. You guys have been tremendous at that recently, so I really appreciate that. And if you enjoyed this type of video, please hit the subscribe button. We try to cater to our viewers as much as possible. And tomorrow we will have our weekend deep dive, where you have our deeper thoughts on the market, the trends, the news catalyst for next week, and kind of just our own personal thoughts on the market. So with that, I thank you very much, and I hope you have a wonderful week.